In Europe, the future losses will only come on the balance sheet of banks, and they are hidden as well as one can. No stress test, just go on business as usual, don't worry, and tomorrow we'll see. And as Willem has emphasized, tomorrow we'll see that our banks probably will also have to make losses, and then the governments have to intervene. But the uncertainty remains in Europe because things are not brought out into the open. That's the first part of my message. The second part is, of course, that within Europe, everybody will say, we are different. Last summer, every finance minister said, our banks are safe. The others might have problems, but our banks are safe. The Germans said the Spaniards have problems because they have a real estate sector going berserk. And the Spaniards said we had dynamic provisioning, and the Germans have Landesbanken. Our banks are safe, the Germans are not safe. And you can repeat that with any pair or number of countries. But there is one aspect which is true, which is that there have been large differences in Europe. And these differences, I think, are pervasive within the euro area. And they basically date back to something that happens almost 20 years ago now, namely the fall of the Berlin Wall, which led to a profound asymmetry within Europe. It led to a construction and general public sector expansion boom in Germany, and the opposite in the rest of the euro area, until 1995, thereabouts. And from then on, things turn around. Germany went into decline, and the rest of the euro area went on a construction and consumption boom. And that you see, for example, here in the house prices. You don't need to look at actually each individual line. You just see one line which is flat, slightly going downwards. On most graphs, you see that's the German line. Not much movement, slightly declining. And then you see the other lines which have much more dynamism. They first go down and then they go up a lot. And these are the other large areas in the euro area, namely other large countries in the euro area, namely Spain, which is on top, France, and Italy. So this was the profound divergence which occurred within the euro area. But remember, I said the average euro area is the same as US. That means France and Spain are way above the US. So you can imagine the kind of adjustment that we are still having in front of us in these countries in terms of house prices. In terms of nominal values, the divergence is even larger. Here I have taken one euro area country, namely Greece, and you see that prices have more than doubled since the beginning of this period here, whereas in the overall euro area they have gone up only by 80%. So some countries have gone even above the euro area. Remember, euro area equals US. If you talk about a US house price boom, I think the one in this country and in many others is even larger. Now, connected with this house price boom, and I think even more important, is another aspect, which is that you had a construction boom. And the key interesting aspect here is you didn't have a construction boom everywhere. You had a bust, so to speak, in Germany. That's again this blue line which goes slowly down. And as you can see, without a financial crisis, construction booms can just fizzle out slowly over 10 years. Over 10 years, construction went down in Germany every year. That was 1 million jobs lost, and that was basically the weakness of the German economy between 1995 and 2005. When that construction bust stopped, the German economy picked up again. Whereas the opposite happened in the other countries, but not to the same degree. And here really you have some outliers. The one that is very important is Spain, where construction went up from around 12 to 18% of GDP. And you can imagine if that has to go down to its pre-boom level or even below, then you lose 6 points of GDP at least. Plus, and that is very important, houses are very durable goods. It means once you have constructed 1 million too many houses, you can basically send all of your construction workers home because they're there. You can, the additional demand which comes every year, you can satisfy from the existing stock. You have a very large housing overhang. I have tried to calculate that for Spain and some other countries. For Spain, the value of the excess construction in overall construction and in dwellings, meaning in private homes, is worth about 25 to 30% of GDP. That gives you a idea of the scale of the excess capital wasted, of the likely losses in the banking system, and of the weakness of the economy for probably a decade or more to come. So here we're not talking about a financial crisis dip several quarters and then hopefully going up again. Here we're talking about a weakness, a fundamental weakness in the economy for probably a decade or something like that. These, as I said earlier, these construction and house price cycles have a very long duration. They're not over in a couple of months or quarters. That is very important to keep in mind. Now let me come also to the, let me perhaps jump over here over the point why you had house price cycles and construction booms in some countries, not in others. The prevalent view is that this was due to the fact that in high inflation countries, the real interest rate was low. Let me not go into that. Let me just say that that actually doesn't stand up to a examination of the facts. I would say that much more important was the structure of financing of the construction sector in some countries where you had short-term interest rates prevalent in Southern Europe, which went much below the longer-term interests which were prevalent in Germany and other countries. But let me jump over that. As I said earlier, the two aspects of a crisis are always asset price bubble and increase in leverage. And here again, as with house prices, you have large differences within the euro area. Let me just take one aspect which is perhaps less technical than the others one could look at, which is the increase in residential mortgage debt as a percent of GDP. Here you see in Germany actually it has gone down over the last 8 years, where it has gone up and exploded basically by about 30% of GDP or even more in Ireland and Greece and Portugal, all these countries with a large construction boom. That is of course the sector where we'll have problems as house prices come down. I think they have to come down, although it's curious, wherever you go you say, we are special.